You're on investing YouTube, you're looking for stocks to buy, you're looking for the best advice going forward. So you're spending a lot of time trying to find the best stocks. And so it makes sense that you're trying to find stocks that are outperforming the overall stock market. When you look at the data and the amount of stocks out there, likely your individual stocks are not outperforming the overall market. I recently saw an article talking about the S&P 500 from 2000 to 2020, where the S&P 500 gained 322%, while the median stock in the S&P 500 gained only 63%. What does this mean? Is it worth buying individual stocks? Is it worth spending all this time trying to find companies that you love and you want to invest in for the long term? Or should you just be buying into an index that follows the S&P 500, the Dow Jones and NASDAQ composite? We're going to talk about that in today's video because I think that there's a right way and a wrong way to look at it. I'm going to talk about some of the general concepts that I look at that I think are important to remember when you're picking out stocks to add to your portfolio going forward. There is a right way and a wrong way for every different investor, and it's different for everyone. So I think it's really important to find an investing strategy that's tailored towards what you're going towards. So I'm going to try to make a general concept video about what I look at when picking stocks for my individual portfolio and talking about when I don't think it's appropriate to be buying individual stocks. I'm very curious to hear your guys' initial thoughts on if it's worth buying individual stocks or if it's just worth buying an index, something like an SPY or a QQQ. I'd be very curious what you guys have to say in the comment section down below. Also, if you like these videos, I really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. Trying to boost up my channel again. It's kind of died recently, but I enjoy videos, and if people still watch them, I'll continue to make them. One of the most important concepts, I think, when it comes to investing is the idea of the law of large numbers. The idea is that the more samples, or in this case, the stocks you pick, the closer to the expected value you're going to get. If you've been looking at investing information at all, one of the most common numbers is that over the past 100 years, the overall stock market has returned around 10% on average. So we'll call that the expected number. So when you get an index or an index like the SPY that follows the S&P 500, you have 500 individual stocks that, when balanced out, get you to the 10%. If you take a normal coin, I tell you to flip it 5 times. Is it possible that you get 5 heads in a row? Sure. But if you flip it 10,000 times, there's no way that all 10,000 are going to be heads. And that's a general concept that I want people to think about when they're picking individual stocks. Any given stock has a very defined downside and an infinite upside. What this means is any given stock can only go down 100%. If a current stock is $100, it can go down to 0, but the upside is infinite. It can continue to go. What this does is it skews the data towards the upside, and that's why it's really important to use the median stock instead of the mean, because when you have extremes on either end, the mean is going to be really skewed towards whichever side the extreme values are on. So the median means that the 250th out of 500 ranked stocks is going to give you a return of, what was that, 63% compared to the S&P 500, which, if you have equal weighting of each stock, is closer to a mean that gives you a value of 322% for returns. So when you look at the overall stock market, you have plenty of options. And everyone wants to pick stocks that do well, but when you look at so many options, there's so many factors that you really don't know what's going to happen. You have some companies that, had a fantastic 2021, stuff like Peloton that was one of the top performers. Well, now that stock is down like 50+% since its all-time highs. Could you have seen that coming? Sure. But then when you look at the bigger losers of the S&P 500, you have stuff like Activision Blizzard, ticker symbol ATVI, which some scandals came out as that's the reason why it's down significantly. In 2021, it was down 28%. And then the biggest loser of the S&P 500 in 2021 was Penn National Gaming, ticker symbol PENN. That was down 43%. But when you look at the 2010s, here are the top performing stocks, with Netflix being the lead with a 3,700% gain, Ulta Beauty with a 1,200% increase, and Amazon with a 1,200% increase. So when you look at the numbers, the winners are riding much higher and the losers are sitting around 50% for the year. When we as investors are picking stocks, I can think about a couple different reasons why you're picking individual stocks. The first one I think of is risk tolerance. You have people that are trying to be risk adverse for a couple reasons. They're trying to, they don't want to lose money. Maybe they don't understand the longevity and the returns of the stock market, and they think it's risky, which it is, but they're worried about losing their entire investment, so they're picking less risky stocks. Some people are getting closer to retirement, and they're not trying to have a big market swing really kill their nest egg. Or there are some people that are going to be using their cash relatively soon. You have people that are picking stocks for the dividends. This is a nice way to bring in cash flow. It's great for older investors and younger investors alike. Sometimes you're picking stocks that you want to feel good about morally. There are stocks out there that I don't agree with. I don't believe that I should be putting my money behind fossil fuel stocks. So I will never be buying something like a Chevron. because it doesn't align with what I want. If you look at my portfolio, I have the most amount of my money sitting in renewable energy stocks because it's something that I believe will do well going into the future and aligns with my morals. And then finally, you want to outperform the overall market. It takes time and energy to research stocks, and you want to feel rewarded, and you want to see your stocks go up more than the overall market because you put all this time and effort into it. So is it better to buy indices like the S&P 500, or is it better to pick your own stocks? I think people can fall into a couple different camps. I think the people that do well with just buying the overall stock market is the people that don't really want to be following the stock market very often. They want to maybe put money in every week, not have to worry about it, and then see at the end of the year that their stocks have gone up and not gone down. That's great. 10% a year, you can build a lot of wealth that way. But for people that are looking to outperform the overall market, I think it's important to think of some general concepts. Going back to the law of large numbers, if you have a small amount of samples, going back to when we talked about flipping the coin, you can get 5 heads in a row. What if those 5 heads mean that you pick 5 stocks that are down 60% on the year? If you bought the overall stock market, you're likely not going to have that type of results. So as you pick more stocks, the range of the results are going to shrink. If you buy just 2 stocks, it can go down 100% and it can go up 1,000%. If you're getting 20 stocks in there, you're likely not going to see the same type of results. Maybe the downside risk is a max 25% in any given year. Upside is maybe 40%. And so as you add stocks, kind of like what we see with the overall, the S&P 500 having 500 stocks, is the winners really pull you up because as I mentioned, there's an infinite amount of upside. A stock can go up 1,000% in a year. It can't go down 1,000% in a year. So I think kind of the way that I think about it is I'm picking stocks that I believe are going to outperform the stock market in the long run. I underperformed the stock market in 2021. Why is that? Because as I mentioned, I bought a lot of renewable energy companies. These did not have a fantastic 2021, but I do believe in them for the long term. So while I did underperform the S&P 500 this year, I believe that over the next 5, 10, 25 years, I'll have more years where I'm outperforming the S&P 500 compared to when I'm underperforming it. I have stocks in my portfolio that are down a lot. I mentioned Peloton, but I also have companies like Apple, Microsoft, Adobe that are balancing out my portfolio. And I think it's important to remember that for every loser that you have, hopefully you have some other stocks that are doing well to balance it out. You have risk versus reward. I have risky stocks. I knew Peloton was a risk when I bought it. Buying something like a Microsoft or an Apple compared to the other stocks in the S&P 500, significantly less risky. And so I think this is an interesting thing to talk about. You see the headline of the S&P 500 is destroying the median S&P 500 stock. So you really need to kind of look at what you're trying to get out of the stock market. Do you want a set it and forget it type of mindset? Buying the S&P 500 is a great opportunity. If you want to do extra research, buy companies that you care about and hopefully outperform the stock market. Buying individual stocks is great, but hopefully you're buying enough stocks where if you have one dud in a year, it doesn't destroy your portfolio. 2022 could be an interesting year. It could be kind of the same thing that we've seen for the past year and a half with stocks chugging up. You have some panic weeks, and then it continues to bounce back. For all the panic that we've seen in the past couple weeks, the S&P 500 returned 27% in 2021. As I mentioned, on average, it returns 10%. So we had an incredible year, even with the panic. So I think this is an interesting thing to talk about. I'm curious what you guys have to say in the comment section down below. And let me know if you have any topics you'd like me to discuss in a future video. Thanks for watching. I appreciate all the support, and I will see you in the next video.